Welcome to Contractor Cuts, where we cover the good, the bad, and the ugly of growing a successful contracting company.
Welcome to Contractor Cuts. My name is Clark Turner.
I'm Jared Flo.
Thanks for joining us again. So this week we are covering how should you pay yourself if you are an owner of a company? You know, we get asked that question all the time by guys coming in like, am I overpaying? Am I underpaying? Can I take more money out? How should I be taking money? Should I take it per job? And there's a lot of ways to chop it, to do it a different way.
Yeah.
Today we're going to kind of cover the two different types of contractors and the way they should initially set up how paying themselves.
It's kind of a big deal. You know, as an owner, entrepreneur of a company, it's kind of a big deal to be able to actually pay yourself some money.
It's the reason you have a company.
Yeah.
I need to take money and I want to make more money next year and I want to make more money the next year. How do I increase it? How do I keep going? What am I looking at, and how do I make the decisions on how much money I could take?
Yeah, well, we run into people in all spectrums of this, where guys come in and they pay themselves nothing.
Yep.
You know, and some of that is not because they didn't want to; it's they couldn't,
or they pay themselves the profit from the first 2 months that were killing it in, and they try to continue
they just keep
that
rolling
pay.
That. Mm-hmm.
And just because you had 2 amazing months midsummer, all of a sudden they drop off, and now. What am I going to do?
Yeah, or somebody sets himself up with a standard of 6 figures plus whatever, and they just stick with it, and they have ebbs and flows, ups and downs in the business. And
the ebbs, they start taking more money out, and the flows, they stay where they were.
That's right.
And so, getting into this, we are going to be covering like a 30,000-foot view. We know every single company is different, and the way we kind of described it is, there is a different recipe in doing this for every single company to bake the perfect cake for them. And
there's no perfect formula. There are some standards, but everybody has a different variable, different things going on that affect how this is going to be.
So we're going to lay out kind of ground level how you should do it, kind of baseline, looking at it and the numbers you need to be looking at and how to make those decisions. But then there's a lot of customization because some guys can do this way, some guys look at this way, and we'll kind of talk through that as well. But all of that to say, if you're going on our retreat, we are going to take this and dive deep with you one-on-one on the retreat to get you exactly what you should be making now and where you need to be to make what you want to make. And that's what we're doing on the annual retreat that we're going on. So if you're interested in that retreat, please go to our website, go to our prostruct360.com resources and then events, and you can sign up for the retreat there. It's a $6,000 cost for the retreat.
Yep.
If you are in the software at the $499 level, it's only $600.
Yeah, you get 90% off of it.
Yeah, so sign up for the software, and then you get it's super cheap to come on the retreats.
Yeah.
If you are also, we are giving out a scholarship this year to a construction company. So if you are wanting to come but don't have the money to come, still contact us.
Yep.
Let's talk about it. We've got one scholarship out there that we're trying this year. We're going to award it to someone. If you want it to be you, let us know now. But also at the time of this podcast release, we only have about a week and a half to sign up and reserve our rooms. So if you're interested, contact us today when you hear this podcast.
Yeah. But if you hear this later on and you're catching up on some old podcasts, still feel free to hit us up because this is stuff that we do throughout the year. We do events throughout the year, and we sit down with individuals and help them work through this.
We do one-off sessions, one-on-one. If you come into the coaching program, this is kind of part of your initial onboarding. But along with that, we double down on the retreats, and we reset every year in January for what 2024 should look like, what 2025 should look like, right? And so the retreat you'll be able to come on if you're part of the program, no matter when you sign up. And so, if it's after January and you're listening to this, feel free to still reach out and contact us because we have other events planned for the rest of the year as well as some one-on-one sessions we can do. But this is super important to custom build around you. But today we're giving you the foundation, the fundamentals of what you should be looking at if you're trying to make this decision on your own.
That's right.
All right, so diving into it, there's really 2 types of contractors that we're going to talk about of how they should build their pay. One type is our level 1 contractor, and the other type is our level 2 and up.
Yep.
And the difference of those, if you haven't been through our program and you don't know our org chart and how we separate the levels, level 1 is a guy still swinging a hammer, right? Yep. He might be out there doing all of the work himself, might be doing sheetrock, might be running paint on houses by yourself. You might start bringing guys with you. You might start building crews, and you might hopefully get to a spot where you're project managing one project and you're running labor on another project.
Yep.
And you're working yourself out of the truck and into project management and more a general contractor as opposed to a laborer.
Yeah.
And so that's the level one guy.
Yeah. If you're putting your tool belt on multiple times a week, painting walls multiple times a week, that's the category that most likely you fall into.
Yep, level one. And so we're going to talk about level one first, and then level two is or any company that is contracting all of the work. They're a general contractor. They've built a little bit larger scale of a company. They aren't doing the labor themselves.
Yep.
They have crews. They have employees. They have
vendors,
1099s, however they have it set up. That this is level two and up is a different way that we like to look at money.
Right.
So let's start with level one. If you're a level one contractor, you're swinging the hammer. The biggest thing you need to be doing to pay yourself is, well, for all levels, is knowing your numbers. And to know your numbers as a level one contractor, the biggest issue that we see guys have is that they will price a job for how much it's going to cost them to do the labor, right? And if you're doing that and you scale from there, the cost of that labor, you're going to have to pay out to labor, and there's no profit on that.
Right.
So the first thing we want you to do as a level one contractor is, it's going to cost me 2 weeks to paint this house. I need $3,000 to do it because that's how I need $6,000 this month to make my bills and to make some money. I'm going to price that job not $3,000 plus materials. I want to have a work order from my labor at $3,000, and I want to make $1,200 profit on top of that.
Right.
So I'm going to price that job at $4,200. Now I'm going to pay myself as a laborer $3,000 on the work order.
Yep.
And that $1,200 profit is going to go into the company.
Yeah.
Right. And so we're going to start building up our profitability on line items that way, to where this is how much it's costing me to do the labor, whether it's me or I'm subbing it out, and I need to make money as a company on top of that labor.
Yeah.
So that's the very first, because guys miss that all the time. They're like, well, I charge $300 a day. I can get by on that, blah, 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 blah. Great. That's good that you can get by on $300 a day. Personally, that's not good to build a company.
Well, and that's exactly right, because I think the big point of this is that, if you want to stay at the place where you're at and you're fine with that and you make decent money and the way that your company operates, that's fine, and continue operating that way. But if you have dreams of growing to the next level where you're not doing work on site anymore and you're more of a standard general contractor, you have to be able to partition this money to be able to make that move.
Yeah.
And so you need to understand that it's two different types of pay. There is the pay that you are paying yourself for executing the work, the labor. Yep. And then there's the pay that you receive as the owner of the company, and really the pay that the company receives for the managing this
overhead,
job, right? In reality, all of that money is, as the owner of the company, all of that money comes to you.
Yeah.
But to make the move to the next level, that partitioned labor money has to be calculated
and sent out. You have to be able to live off of the profits to be able to start managing crews and managing the labor. So we're looking at it saying, hey, I'm only making $1,200 in 2 weeks off the profit on this. I can't live on that. Great.
Then you're not ready to make the move.
You're not ready. If you have 3 jobs going, and you're and now you're making $3,600 in 2 weeks, you can live off that.
Correct.
So that's what we're looking at, is separating that out. That we hear all the time, well, how do I price my jobs? How do I price this? How do I price that? What we're saying is how you price it. How much is it going to cost for the labor? And I'm going to put a 30% markup on top of that. Right? Start there. That's how you price it. If it takes me 1 week to do this job, and I need to pay a guy $4,000 a month, easy math, I need $1,000 for labor for that week to do that particular job.
Right.
So then I need to mark that up 30%, and that's what I'm making as the contractor on the job.
That's
so
right.
Again, that's kind of basics on pricing. But with that being said, before you look at paying yourself, I want to start you out on level one. The labor I'm going to live off of, the profit I'm going to bank.
Yeah.
And we're going to start growing the company. Now, if I'm on site, if I'm not on site, if I'm managing a crew over on this job, but I'm on site on this job, as we're growing through level one, trying to get to level two, I'm going to flip it. So on this job that I'm doing labor, I'm making the labor profit or labor costs, banking the labor profit.
Yep.
On job number 2 that I'm managing, I'm paying out the labor cost, and I'm taking that labor profit and banking that as well.
That's right.
And so I'm trying to get that 30% markup on all of my jobs that are running to where that is what I'm going to eventually be living off of. And then until that gets to the size that you can live off of, you got to keep doing that labor. Right. And so that's how we're looking at that kind of short term of how you're working. Now, of that profit, we'll talk about that next. You can't just take, I made $1,200 this month on profit, I'm going to put that all in my pocket.
I'm going to zero out the bank account.
And so we'll talk about that on part 2 of this with level 2 contractors. But with level 1, it's we're going to crawl, then we're going to walk, then we're going to run. And
That's right.
Crawling is I need to break even and make some money. I need to make my money on the labor, and I need to bank my profit and start building cash flow so I can take on more jobs, make hires, cover overhead, that sort of thing.
And that's why we talk about this transition is one of the most difficult transitions of all of the stages that we've got, is moving from that laborer manager to full-time management. That transition is very, very difficult for multiple reasons, but one predominant reason is just because of cash flow, because it just dynamically changes your cash flow.
Well, today, if I'm running one job, I'm making $4,200. I got that $3,000 for the labor, and I got $1,200 for this. And so I live a lifestyle that spends $4,200 every 2 weeks, right? That's a $8,400 a month, which is you're making 6 figures at that point, right? So I'm living the 6-figure life, but all of a sudden, 75% of that goes away when I'm trying to sub it out. And
well, so you get to a lot of guys get to the place where like, I'm so sick and tired of putting my belt on. I don't want to do it anymore. I'm getting older. I don't want to do it anymore, whatever it is. And they try to make this transition and keep making the same money. And it'll tank you. It'll tank you. So you have to understand your numbers. That's why, I mean, honestly, everybody that I talk to who comes to me at that level says, well, I have a QuickBooks. I mean, I don't really, because it's not really necessary. But if you're going to move, you've got to understand your numbers, and you've got to have some kind of system that organizes those numbers so that you can see them.
The biggest thing that you can do to make the transition from level 1 to level 2 is to go from QuickBooks in your accounting to be evidence of what you did. To QuickBooks and accounting to be the projection of what you're going to do.
That's right.
All right, separate those out. When I'm looking at my QuickBooks as a one-man show, as a non-growing company, I don't care that much about it because all it is a ledger of everything I've done. And I make what I make this month, and that's going to show me in a couple months what that ended up being. The professional companies, the companies that are growing, the larger companies are now taking those numbers, projecting into the future, and making decisions off of what we feel is going to happen based on the past, based on what's coming up, based on the pipeline. And that's why it's so important to have those numbers perfect. And so guys come to us when they've been living in this, that's just my record keeping. And they come to us and say, hey, I'm ready to grow. And we're like, okay, so show me your numbers. Well, what numbers do you want to see? All of them.
Right?
Well,
I've got $3,000 in my bank account. This is no.
So step 1, no matter what level you are, is going to be organizing your QuickBooks or your accounting software that you're using our software, ProStruct 360. The software side of what we're doing really manages that for you. It dumps it all into QuickBooks and keeps it all organized for you so you can see it. We can run a report on one click of the button. If you're on our complete level and you're integrated with QuickBooks, we can really dive into this stuff if you're managing your jobs. So going into level 2, a level 2 contractor, if you're going to pay yourself. If I am now a contractor subbing out my work or using other people's labor, I'm not swinging a hammer myself. What we want you to do at a level 2, like we just said, step 1 is knowing your numbers. If you don't know that, then you can turn the podcast off now.
Can't stress that.
There's nothing else you could do if you don't know the numbers, because I don't know how much you should be paying yourself if you don't have that evidence of the past as well as accuracy of what's happening in the future. Next, let's say you've got a clean QuickBooks, you know your numbers, you know what's going on. This is what we're looking at. And again, this is a basic breakdown with round numbers to help people understand how we're looking at these numbers. And we're going to dive in individually with you to look at your specific numbers at the retreat. All right, so let's say your revenue is $100,000 a month. Right? You're doing $1.2 million a year. I'm running it. I'm a GC. I'm just getting going. million two is kind of the average general contractor who's
I'm
not
not
swinging
doing
the hammer.
any of the work myself.
Yeah, that's kind of where the starting point is for a lot of those guys. Really, starting point 750 to 900, and then they get to 1.2 ish is ideal for those guys getting going to continue going.
Right.
So we're gonna start with that number, $100,000. On that, $30,000 should be profit. If you're hitting 30% profit on cost of goods, on that only profit, and again, we break it down differently than other companies, but for us, it's labor and materials. It's not management costs.
Right.
It's not any overhead for the company. That 30% profit is on labor for that specific job, material spent on that specific job. So let's say I've got $30,000 profit month over month from just the cost of goods.
Yep.
From there, I'm going to subtract out my overhead. Let's say we've got $12,000 in overhead. What is overhead to you? To me, it's any employees that I'm paying. It's my truck for business work use. It's my gas. It's my cell phone.
It's really any expense, any business expense that you cannot directly tie to a project.
Yes.
Right? It's anything. If I buy a paintbrush for a job, that's not overhead.
Yeah.
That is for that specific job. If I put gas in my car, that is overhead.
You're
right?
visiting 5 houses.
I can't tie it directly to a job.
Yep.
So it's any expense in your company that is not tieable to a job. It's just an overarching cost in the company.
Yep. Now, I don't want to get too far in the weeds with this. We like to separate out, like if your wife is driving a company wrapped vehicle for advertisement and you're running that through the company, I like to pull that out of overhead and have that part of the numbers for my profit because that's really my personal expense. If I sold the company, I'd still have to pay for that car.
Right.
That's how I kind of look at that.
That's where all of this can get really complicated. Is where you really
and that's where we dive into it because overhead is where you win or lose with profit. And so we like to dive into it and try and start sorting that stuff out to say, okay, so if you had to pay bills, this is what you're going to pay. These are the extras that you're spending on yourself.
Yeah.
Let's kind of count that as part of your take home.
Yeah. Well, and the reason why we just said 30% is the profit you made on that $100,000 was $30,000, right? If your overhead is 28%, you're like, and so you need to know that and go, okay, 28%. I got to trim this down. You know what? I can't run that car through here. I can't have that free car wash thing that I'm running, right? You've got to dial those things in.
Yeah, that's right. So let's say you're over, it's $12,000 for insurance, gas, all that stuff that you're paying for.
Yep.
So you're left with $18,000 profit, right? And so from there, I first want to put away into my tax account 25% of that. So I immediately take $4,500, put it in an account that I don't see. It's not on my screen. I can't borrow from it. I pretend it's not there. I pretend I already paid Uncle Sam.
Yeah.
Some guys set it up to where they pay monthly, some quarterly, some annually. Whenever it is, that's the account you're paying out of, and you're going to put that money in there and walk away because you can not pay the bank and deal with them. You cannot not pay Uncle Sam, right? And
and one trick of the trade with that one is actually having a separate bank institution account that money goes into, and you opt for no online banking.
Yep.
So the only way to touch that money is to physically go into the bank.
Yeah.
I know that's complicated, and it's like I do everything online. That's the point.
Yeah.
Right? Because it's very easy. Opportunity happens. A job struggling.
I'm getting a check next week. I'll repay it, and then you don't repay it.
Yep. And then all of a sudden you get to the end of the year, and you've got $30,000, $40,000, $50,000, $60,000 that you got to run a check to the government, and you ain't got it.
Yeah.
You know.
And so putting that 25% in the tax, it depends on what state you're in, what tax level you're at.
Yeah.
If you're making a lot of money, you might want to get up to 30, 35%, depending. That's an accountant conversation.
And there's a book that we're going to reference later on, but it actually says to take 50%.
Yeah.
Take 50% of your profit and put it into your tax account so that when you get to the end of the year, if it costs you 50%, great, you've got it.
You pay Uncle Sam, and then you bonus yourself with the rest.
That's right.
That's ideal.
Yeah.
But again, when you're only doing 1.2 million, it's very difficult to put that much away. So I say start at 25% because if you're at 1.2 million, you're not going to be in a higher tax bracket if you're only, if the profits are at 18,000 a month.
Yeah.
You'll be in a decent tax bracket, but you definitely can probably be safe with 25, 30, 35%. talk to your accountant in your state for that.
Yeah.
So I put that money away. So what's left is $13,500. I know we're using a bunch of numbers, but we're just understanding the concepts.
Yeah.
What's left after overhead, taxes, I got $13,500 left. What I want to do with what's left over, I want to put half as my paycheck.
Yep.
And I want to take the other half and put it into the company as a capital investment. Leave it in the company to keep rolling. The reason is next month, if we have zero profit, I got that money there to pay my paycheck. Or next month, I want to start a new job and I'm going to go from 2 jobs to 3 jobs. I need some overhead. I need some cash flow for that.
Yeah.
So we're going to build cash flow in the company with that.
If I'm going to make the transition from a laborer to a project to a manager, right? I've got cash to float myself. If I'm going to hire somebody, there's cash needed to float.
Yeah.
If you start a new job that this specific client doesn't pay for 30, 45 days, I've built up some reserve to be able to do that.
I mean,
right?
I rule of thumb for me is I want cash flow equaling to the amount of revenue I'm doing monthly.
Yeah.
So if I'm at $100,000 a month, I probably have 80 to 100 deployed in cash flow with floating jobs, collecting checks, paying crews, and all that stuff.
Yeah.
And if I want to go from $100,000 a month to $200,000 a month in the next year, where is that extra $100,000 of cash flow coming from?
Yep.
Right? You're going to go get a loan, and then you're going to shoot yourself in the foot.
Yep.
So what we want to do is start
We've
building
never done that.
Never. No, we haven't done that at all. It'd be dumb to do that. No, but I mean, we know because we've made the mistakes.
Yeah.
And we've gone out and done that because it's like, I got jobs. I can get to $200,000 a month with this. Let's go take a loan so we could float these jobs and move forward. And you never pay that back. So now it's just a ticket that you're paying once a month of paying that loan back.
Small caveat, if you've done that and you're struggling with a loan, we have a podcast about a few months ago that's specifically about to loan or not to loan, talking about all the different variables and how to protect yourself to do that.
Right.
So go check that out.
So if we take that $13,500 and split it in half, that means my take home is $6,750 I can pay myself this month. I'm going to try to set that as my month over month goal, and I'm going to try to build my lifestyle around that. Now that's, again, you're running $1 million company, $1.2 million, and you're taking home $80,000, $81,000, $82,000 a year.
Right.
If you can live on that, great. If you need more, this is what we're going to do. We're going to start looking from this spot. If my take home, if I run these numbers and it's like, well, this means I'm only going to be able to take home $3,000 a month, and I can't live on that.
Yeah.
Okay, so let's start diving into the numbers as to how to change that.
And first of all, the first place that people go is they're like, well, I'm not going to split it 50-50. I'm only going to put 10% in savings.
Yeah.
And then I'm going to just take all that money.
And when I start making more, then I'll go over that. That's a recipe for disaster. That is the break glass in case of emergency way to operate.
Right.
And we don't want to set it up or have plans to break glass in case of emergency.
Yeah.
Because if you're starting in the emergency, there's zero safety net.
Yeah, that's right.
So what we want to do is, let's say this works. Let's say this is set up. I've got this. The numbers work. I can live on $6,750 a month. I'm going to put money away. I'm going to handle all that. The next thing you need to do, whether it does work or not work really,
right,
is once I know these numbers, I'm going to only concentrate week over week, month over month on 3 aspects of this. I'm looking at 3 numbers weekly in my company. Revenue for the month, profit percentage on that revenue for the month, and what are my overhead expenses. Those are the only 3 things that you have control over to either make money or lose money. That's all we're looking at.
These are the areas that when we sit down with people on the retreat, these are the spots that, okay, let's spell out all the numbers.
Yeah.
Now let's look at where do you need to be, where are the holes, where are you in trouble? And then we look at these 3 things and say, what can we do about these? Can we take on more revenue? Are we charging enough? Are our expenses too high? And figure out, is there a spot where we can manipulate this to do and get to the numbers that we need to be at, or get out of the hole that we've put ourselves in?
Yeah, and that's hiring decisions, spending decisions. A bunch of different decisions are made looking at those 3 numbers and having this budget laid out in front of you.
Yeah.
Because what you can do is take those and say, okay, if this is your company, and I was consulting with you, Jared, and I was like, okay, so you're at $100,000 a month. How much more work can you handle without making any hires, without hiring a project manager? How much? And you're like, I'm maxed out, man. 100's it. Great. So that number can't budge.
Yep.
Profit. It looks like you're making 12% profit right now. What's going on? Well, I had to say yes to some jobs just to get jobs rolling, blah, blah, blah. okay, so you're not going to survive as a company at 12% profit.
Right.
So we have to increase the numbers that you're bidding and figure out how to land those. And maybe are you overpaying labor? Are you spending too much on materials? Let's look at all of those. But we have to start expanding that profit number.
Yeah.
Or, hey, profit looks good. Revenue looks good. You're maxed out on how much you can do without a hire. Let's look at your overhead. What are you spending on? Well, I got this truck payment at $1,400 a month, and I got this rent at $6,000 a month, and it's like, whoa.
I wanted to treat my employees well, so I went ahead and bit the bullet, and I got them insurance and 401ks, and I'm paying all of that out this month, or monthly or whatever, which is fine.
Yeah, honorable.
Can you afford it? Again, if you're making 30% profit and your overhead is 28% of that $100,000, you can't survive.
You're going out of business. Yeah.
You can't survive.
We rent an excavator, I feel like once a month. So I went ahead and just bought one to be cheaper. Mm-hmm. Sell the thing.
Right.
Put the overhead expense. We talked about this a few podcasts ago about renting. If you're renting once a month, put that in what you're charging and marking up to your client. That's now buried in your cost of goods. You're still making your profit, and you just lost that monthly payment on the excavator off your overhead. We lowered the overhead to bring in more monthly cash to the company. Right? So that is all where like the recipe is changed, where we start switching stuff around, assessing per company, where are they at, how do we make the numbers work, and how do we make you more money as a company?
Yeah. Well, one other thing to think about, we talked about just for the numbers, splitting that 13.5 into $6,750, right? That's what you're taking home. Eventually, working with your accountant, your CPA, what you will want to do is actually set a portion of that money up as a salary. So you're being paid as an employee of the company a salary for a portion of that cash. But you need to be careful with that. Can you maintain this amount of profit month over month?
Yeah.
Right? Because once you set yourself up as a salaried employee, you got to make sure you're hitting these numbers.
Yeah. And when he says salary, it's more guaranteed payments as an owner.
Correct.
It's we're not talking the way the W-2 versus owner.
Right.
It's a set take that it's a guaranteed payment if you're an owner that you're considering your salary. The accountants have to, different states have to do different baseline salaries where you're taking it from. So you'll have a portion of that separate out into salary. The rest of it is a profit from an investment in a company.
Right.
Don't worry about the accounting side.
Yeah.
Have a really good accountant to tell you how to set that up and help you set that up. But what Jared's saying is, I'm going to have a certain amount of money. For me, in our company, it was weekly. Once a week, I take this paycheck, and it's going to be a guaranteed payment once a week that is just part of the bills.
Right.
And so we have a really good month. That doesn't change.
Uh-huh.
It's just the set amount. A great month, good. Put that money away. We can make a hire soon.
Yeah.
So that's where we want it to be set up. Now, if you have a bad month, you're the salary that's going to drop, or maybe we've banked money for 4 months, and that's what I'm going to use to pay my salary this month.
Right.
But if I go 3 months of bad months, I'm going to adjust my salary, right?
Yep.
We need to start looking at that stuff, start saying what's the minimum, all that sort of thing.
Yeah.
So if you want a book, we've recommended this on one of our TikToks, but if you are looking for a book that really dives into doing this, there's a book called Profit First. It's by a guy named Mike Michalowicz. And the book is great. It really dives into the numbers, helps you. We've got a full report that we built in a spreadsheet that we can give you as a company that breaks down exactly. I'm going to put my numbers in. It's going to spit out the percentages that are ideal.
From the way the book talks, the contracting industry is kind of its own thing.
Yeah.
There's a variable of the way that we operate based that's different than like a standard business.
Yep.
Because of labor and materials and all of that stuff. So there is a variance from the way that it works, which is why we built our spreadsheet to help figure that out. But the concepts, I actually just recommended the book to somebody recently, and they read through it and they came back and like, dude, that was so helpful.
Yeah.
Just to give me a different perspective of the way to look at it.
Yeah.
The book's called Profit First, and that's the concept.
Yeah. The goal is I'm going to build a company around me taking my paycheck first, because if I can't take a paycheck,
why am I doing
reinvesting never helps. Like I need to have a company that's. I might not take a paycheck for 6 months, but this is the plan when I hit these goals that I'm going to start paying myself to ensure that I am taking money, because I'm taking the risk on this company and building this company.
That's right.
If you want to dive into this with us, please go to our website, prostruct360.com. Hit us up. Hit the Contact Us button. We'll love to talk to you about it. If you want a session just to ask some questions, we'll do that for free. Even if you're not in our coaching system, no problem. We're here to help you. We know that if we can help you guys grow, you're going to be with us long term. We can work together. We can partner. When you need us, we're here. When you don't need us, go run it, handle it. And so we are here to help guys grow to the next level. If you're looking for software, our software is live. You can sign up right now to get in it. We've got a free version, $89 if you're using vendors and subs and want to be the work order system, and then $199 a month for the complete everything, QuickBooks integration, emails, everything you want is all there. Go to prostruct360.com, check that out, set up a demo. We'd love to show you exactly how it works and how it will work in your company.
That's right.
It's a really cool piece of software. So thank you guys so much, and we'll talk to you next podcast.
See ya.
All right.